Hey everybody, welcome to the channel. Soil here, and today I want to teach you how you can make $100 per day trading cryptocurrencies regardless of the market status, whether it's a bull market or bear market. Without wasting any more time, let's go to the chart. Alright, the strategy I want to teach you in this video is a scalping strategy for trading on 5 minutes time frame, which is a very powerful and effective trading strategy with high degree of reliability. Please watch this video until the end because throughout this video I'll mention many important points about this strategy and also other aspects of trading which without paying attention to them you cannot run this strategy successfully. Alright, as I said, this is a 5 minutes scalping strategy. So here we set the time frame on 5 minutes. We must add two indicators to the chart. For adding indicators, we click here on indicators and simply search the name. The first one is super trend, this one, which we use it with the default settings. We don't change anything here in its settings. And the second indicator that we want to add to our chart is stochastic oscillator, this one. For this indicator, we must change its settings so it can better match with this low time frame and our analytical approach. For the K% length, we set 7, and for the K% smoothing, we set 3, and for the D% smoothing, 3 is okay. We click on OK. And here we go. Alright, now everything is set and let's see how we trade based on this strategy. This is a trend following strategy, which means that we enter in the current short-term direction of the market. So we enter a long position only when the direction is up, and we enter a short position when the direction is down. We use super trend for this purpose to identify the direction. So when the price is above the super trend line, in other words, the line and the area below the line is green, we look for a long position, and when the price is below the super trend line, in other words the line and the area above that is red, we look for short positions. Let's make it simpler. We must look for long positions when the super trend indicator is green, and we must look for short positions when super trend is red. Then for discovering trade entries, we use stochastic oscillator. If you're familiar with stochastic oscillator, so you know that reading below 20 shows oversold and reading above 80 shows overbought, and crossing of K% and D% in these situations provide trading signals. But we don't care about every crossing signals, and we want to filter false signals as much as possible. So in this strategy, we only take the signals that are in the current direction of the market. When the super trend is green, we wait for the stochastic line to go below 20. In other words, we wait for an oversold condition in an uptrend, which can be a good opportunity to enter in the direction of the market. In this situation, when the K% line crosses above the D% line, it gives us the signal that the price is gonna bounce and go up, so we can enter a long position when K% line has already crossed the D% line. For example, here the super trend is green, stochastic oscillator is below 20, and then K% line crosses above D% line here at this point. So we open a long position here, and the stop loss for this trade is placed below the super trend line, just a little lower than the line, as you can see. And for the profit target, we set it in a way that the risk to reward ratio becomes 2. For example, another signal we got here, the super trend is still green, the stochastic oscillator went below 20, and here we got the crossing, which gives us the signal to enter a long position here. So for another trade here, we can enter at this point the stop loss below the super trend line and profit target in a way that gives a risk to reward ratio of 2. And another signal we got here, let me make this a little bit smaller. Here again, while the super trend is green, the stochastic oscillator went below 20, and here we got the crossing, so we can enter a long position here at this point starting of this candle. So another long position here at this point with the stop loss below the super trend line and the profit target in a way that gives risk to reward ratio of 2. If we move forward, no signal here, and another signal we got here. So we can also enter a long position here at this point starting of this candle, the stop loss below the super trend line, and the profit target in a way that makes the risk to reward ratio equals 2. Alright, these are the long positions that we could take here while the super trend was green. And for short position, we do the opposite. When the super trend line is red, we wait for the stochastic to go above 80, which shows an overbought condition in a downtrend. Then when the K% line crosses below D% line, we enter a short position. For example, here the super trend is red. At this point, the stochastic goes above 80, and here the K% line crosses below the D% line, which gives us a signal that the price is gonna fall. So we enter a short position here at this point after the successful crossing of the K% below the D%. The stop loss for this trade is placed a little higher than the super trend line, and for the profit target, similarly we set it in a way that gives the risk to reward ratio of 2. Please pay attention that in practice, many of the times the price may go beyond our profit target, but in this strategy we are taking a conservative approach and we want to take our profits earlier and in smaller amounts in each trade, so our collected profits will add up in the course of a longer period. Anyway, taking trades with risk to reward ratio of 2 is far enough for making consistent profitable trading. Alright, let's go forward to show you some important points about this trading strategy. Here the super trend changes color, but no signal here, no signal also here after this changing, and also no signal here. But here we got a signal which is a false signal. Super trend is green, the stochastic went below 20, and then we got a crossing, but after that the price didn't go up. Here the super trend changes color and it becomes red, and here also we got another signal for opening a short position, but again it's a false signal. The price didn't fall after that, as you can see. And your stop loss could possibly hit here at this point. Alright, you must know that having a false signal is part of the game, and it's impossible to have a trading strategy with 100% winning rate. But one thing that you must pay attention here is that this is a trend following strategy. So in the times that the market is moving flat, the number of false signals will increase. When we had this signal here, it was clear that the market is flat, so we could avoid this false signal. To lower these kinds of risks, you must always watch the price action regardless of what super trend says. And also it's a good idea not to trade instantly after the color changing of the super trend if there is any signal, and give it a little time to see if it's developing in that direction or not. For example, starting from here, we can see that the price is moving lower after super trend changed to red. Clearly declining of the price can be seen. We got a good signal here, the super trend is red, the stochastic oscillator went above 80, and here we got the crossing, so we can enter a short position here at this point with the stop loss being set above super trend line and profit target in a way that gives us a risk to reward ratio of 2. Another good signal here at this point. Super trend is still red, stochastic oscillator above 80, and here at this point we got the successful crossing, so another short position can be placed here at this point. The stop loss above super trend line and profit target in this point that makes the risk to reward ratio 2. If we move forward, we can clearly see we have much more good signals. Another one, for example, here, the stop loss above the super trend line and the profit target here. Another opportunity again here at this point. So we can open another short position starting from this candle, the stop loss here, and this is our profit target. And another one could be here at this point. And this downside move is continuing, as you can see. All right, now we come to the most important aspect of this strategy, which is risk management. I explained how you must set the stop loss and profit target, but you must also define the amount of loss on each trade. This is a scalping strategy, and you're going to trade actively in a day. You may have 10 tradings in a single day, and if you don't control how much you're going to lose, you will blow up your trading account faster than what you think. Losing trades are part of the game, and winning every single trade is impossible in reality. So besides setting a stop loss to prevent unexpected losses, we need also define how much we're gonna exactly lose on each trade if the market goes against us. There is a risk management strategy for active trading which is called 1% rule, and by the help of this strategy you only lose 1% of your trading account on each trade if the market goes against you. I explain it very shortly here because I have a complete guide to this strategy. The link is also in the description of this video, and I highly recommend you to watch it later because it's really important to manage your risk properly. Getting back to our strategy, as I said, we're gonna lose 1% of our trading account on each trade in case if the market goes against us. Consider we have a $10,000 trading account, and on each trade we want to lose 1% of this, so that would be $100. Now consider we want to enter a long position on Bitcoin at $30,000 and we want to set the stop loss on 29,000 for example. So here the maximum loss per coin is $1,000. Now we divide our defined maximum loss amount, which is $100, 1% of our trading account, to the maximum loss per coin, which for this trade is $1,000. The result is 0.1, which is the amount of Bitcoin that we must buy. So we buy Bitcoin worth of $3,000, nearly 1/3 of our trading account, but without any worry, because if the price goes against our position, we only lose $100, only 1% of our trading account. I recommend you to watch my video on this, which there I explain everything in more details and more examples, so you will better understand the whole concept of this risk management strategy. The link is in the description and it's highly recommended to watch it if you're not familiar with this, because without this 1% risk management strategy, you cannot achieve success and consistent profit with this scalping strategy I explained in this video. Not only for this strategy, but in any other trading strategy, you must have a proper risk management strategy, and that's the vital key to your success. Please pay attention. If you're a beginner and you don't have much trading experiences, you shouldn't try this scalping strategy with real money. Scalping is not recommended for beginners because of the higher degree of risk involved in compared to other types of trading. Successfully scalping demands a well-developed psychology of trading and controlling emotions because of the higher number of trades per day and the ability to manage them effectively. So if you're not an experienced trader, I highly recommend you to practice as much as you can and start with real money only if you're consistently profitable in paper trading. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.